Hey, I'd like to welcome you to another episode of Money Matters Top Tips for Success, where each and every day I bring on new business owners, entrepreneurs, and executives and have them share their top tips for success with you. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres to keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, moneymatterstoptips.com, and click on Become an Author to apply. All right, so today is a very special Reunion 2020 episode. What is that? That's when I bring on a guest that I had on in the past, and I liked them so much I had to bring them on back to get some more from them. So today's guest is Benjamin Lapidus. He's a partner and real estate developer over at Spartan Investment Group. Ben, welcome back to the show.
Adam, thanks so much for having me back.
Oh, man, I'm excited to get into what you're doing over at Spartan Investment Group. Let's just jump right in. So first off, give us a little bit of the background on the business, please.
Yeah, Spartan Investment Group is a real estate syndication and investment company. We focus on self-storage assets proactively, but reactively, we are willing to look at anything that is opportunistic and a good business opportunity. And we do this, what makes us different is we do this by syndicating capital from Main Street, as was originally a friends and family network that has since grown to, we're closing in on 2,000 different members that has access to our deals.
Man, that's awesome. And so let's go a little bit further into what is a good deal. So we're in the self-storage space. What do you like out there? Give me a little bit more on the methodology.
Yeah, so self-storage is great because it follows the 3 E's. It's easy to maintain, easy to manage, and easy to what I call monetize, which really is just easy to evict. So that was kind of our qualifying criteria when we looked at what commercial real estate asset class we want to attack proactively and build a portfolio around, and gain really in-depth operational, underwriting, and marketplace competencies. So that's why we like storage. What's going on in storage is cap rates continue to compress, though very, very marginally, as interest rates are coming down again, meaning that things are getting more expensive even though they're not creating more value. And so we're seeing that being a bit of a peak, a bit of a slowdown in potential value add opportunities. It makes it more difficult to identify good opportunities. And so we've responded in kind by making additional investments into our team. We've grown our team from the start of 2019 to the start of 2020 from 8 people to 22 people, with an emphasis on acquisitions and research so that we can be more robust in our evaluation of different opportunities and more competitive when we do find one that we like, so that we can take it down with less buyer pool competition and get the price that we want with the terms that we want in a mutually beneficial transaction with the seller.
Man, first of all, congratulations over doubling work size in a year. Man, you guys are rocking and rolling over there.
We're getting there. Yeah, we're getting there.
That's what I like to hear. This is great. That's why I got to bring people back, because you are doing awesome things, and I have to know these things. See, man? So you said obviously pressure on cap rates in certain areas and competition. That being said, any kind of areas that I'm guessing that you're with the expanded team and the research that you're really going after these. You must be going after some. What areas are you liking right now? I guess it's probably just not as obvious as it was once upon a time, where you could just look things up, huh?
Well, 5 years ago, you could really buy anything and you'd make money without having to try or put in any elbow grease. A couple of years ago, things started to look a little bit suspicious. But even if you bought 2 years ago, you're still making money by not having to do anything. Though that's more luck than timing. Today, we've always concentrated on secondary and tertiary markets just by consequence of our time frame. So because we're syndicating capital from Main Street, most folks like their money back within 5 to 7 years. So we've got a abbreviated time frame on our underwriting. And so if we're trying to compete with institutional capital with 2-3% money that is looking at 30-year timeframes, 100-year timeframes, there's no way we're going to compete. And they're really focused on the top 20 MSAs. So we steer clear of those. We like to look for the suburbs outside those top 20 MSAs, because while they are considered secondary or tertiary markets, which we love, they're also markets that are being economically benefited by the growth of those markets. So we ensure that we've got population growth, job growth, income growth, rental growth, and not too much supply growth in those markets that we are attacking. So we did a market reduction a year and a half ago that we update every 12 months that boils down all of our searches into 154 markets across 33 different states. And we look for assets by partnering with every broker that we can, becoming their best friends, but also by having seller direct conversations. For folks who might not fit that real estate agent mold, they might want a unique transaction that the marketplace won't meet. We'll find them and we'll say, these are the 100 different tax-based creative ways to transact that you might not have been aware of. Let us be your counselors and your advisors, and we're going to make you very, very happy. So a lot of data, but also a lot of relationships in our approach to real estate investing.
Man, yeah, and when you said you're putting in the sweat equity, I mean it shows. Investing in not only human capital but also in the relationships. So that's not an easy thing to do over time and to do well, which you guys are executing on. So plans for 2020 for Spartan. Give us the inside track. What's the year going to be looking like for you in terms of focus?
Yeah, so every 3 years we come up with a new strategic plan, which is the high-level strategy that dictates what we're going to do for the next 3 years. And 2019 was that year. So we've got a brand new, fresh off the presses plan from 2020 to 2022. My focus at the company is both finance and acquisitions. On the acquisition side, we're looking to acquire $250 million of real estate over the next 3 years, ramped up, about 50 to 75 this year. And in Q1, we've already got scheduled to close close to $25 million worth of total project cost opportunity. So we're a little bit ahead of the curve for Q1 for 2020, really. And then we're looking at advisory services, potentially open up our own brokerage shop, get clients that can monetize assets that we find that we don't really want in-house. We want to make sure that we can get a return on time of everything that we do. So if we look at an asset, we spend time with it, and we say, you know what, this really isn't for us, this isn't for our investment team. Let's find a way to monetize it. Let's wholesale it to somebody else. Let's advise a family office on how to buy this. Let's list it ourselves if it's seller direct and they don't have an agent already, that kind of thing. On the finance side, we're just looking to get a lot tidier. So we've got 10 different LCs, 22 people. That's potentially hundreds of different credit cards. The robustness of our bookkeeping with the different intercompany relationships has gotten a bit out of hand, and the entire team on finance is myself and half another person to assist me. So we're just looking to get a little bit more formalized, and then instead of being proactive with our bookkeeping and our tax accounting, get some FP&A help, financial planning and analysis, so that we can be a little bit more proactive on our updated pro formas and roll those pro formas up and do some better asset management, which requires a good financial backbone. So that's another goal for 2020, just getting a little bit more buttoned up on the finance department.
Man, that's exciting. I love it. And by the way, my head hurts just thinking about the amount of data and the amount of I'll stop there. And for that, I will transition to a nice, comfy topic. Best ever conferences coming up. Tell me about that.
Yeah, it's another hat that I wear. On the side of Spartan, I put together a conference every year for commercial real estate investors, operators, and syndicators. And it's in the fourth year, we've moved it to Keystone, Colorado, which is one of the closest ski resort mountains in Colorado from the Denver International Airport, and the only resort that has night skiing. And so we attract, so far we've got about 550 folks signed up.
Wow.
We attract typically over 600. We estimate that from the folks already registered, there's about $9 billion assets under management on the syndicator side of the house, the folks who are like my company. And then about half the room are high net worth individuals that have a hole in their pocket, burning in their pocket, looking to place that capital with companies like ours. So it's just a great room to be in. 98% of folks have done at least one commercial real estate deal in the last 6 months to attend. So it's a very high quality event, high ticket price to ensure that high quality. And with a 50-50 room split, audience split, between investor and syndicator, people with money and people with deals, it's a great networking opportunity for people to match themselves with new partners. And so we don't have anything to sell at this conference, unlike other real estate events in the space. Not that not having something to sell is a bad thing. It's just it's a different time and place. We have no fluff, no sales, no gimmick. It's really just a trade event for other syndication companies like ours. And people have really latched onto that, and it's become a premier event in this little kind of small real estate syndication world that we live in. So we're very excited about that. It's coming up on February 20th through 22nd. Anybody who might want to attend that's listening to this podcast, they can check it out at bec20.com and use a discount code BEC15 for a 15% off. They wanted to join us for some skiing and some partying and some education on commercial real estate investing.
Man, that's exciting. And if somebody's listening and they want more information on Spartan Investment Group, what's the best way for them to get that?
Yeah, they can check out Spartan-investors.com, and that's investors with an S, or reach out to me, Ben at Spartan-investors.com.
Fantastic. Well, hey, Ben, been great catching up with you, and great to hear about all the great work that you guys are doing over at Spartan Investment Group, man. Really excited about that, and also about the conference. That's awesome. Over 500 people already. If you're listening to this yet, what was the, where do they find out the information on the conference again?
Yeah, thanks for asking, Adam. BEC20.com. BEC20.com.
And what was the code to get some money off? And what was the code to get some money off?
The code to get money off is BEC15 for a 15% discount. BEC15.
Perfect. Well, hey, Ben, thanks again for coming on. To the audience, thank you for tuning in. I hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast. We couldn't do this without you and your attention. We really do appreciate it. And Ben, thanks again for coming on.
Thanks, Adam.